Hi, good day everyone, and welcome to our pre-recorded session with Mr. Najia H. So today we're going to be looking at the concept of VAT treatment within the accounting for attorneys practice. So I hope by this time you've already covered the VAT concept with your respective lecture. If you haven't, please make sure that you look at your textbook in terms of the VAT treatment or the VAT explanation concept in terms of who is required to register for VAT, what are the requirements for registration for VAT, and once a company is registered for VAT, it's going to be referred as a VAT vendor, meaning that this business can be able to charge VAT and be charged VAT. And there will be two types of VAT, which is going to be the input VAT, which the input VAT is the one that the business will be charged by another company. So in order for you to be able to remember the classification of when we have input VAT, it means that something is coming in the business or you're either receiving a service from a third party that you just currently paid for. So this means that when you are paying for something or when you buy something, you will be charged VAT. That VAT will then be referred as the VAT input. And then when a business charges its own client for services that it has rendered, the business will therefore will charge VAT in addition to the fees that are stipulated within the Legal Practice Act. So the Legal Practice Act will stipulate the fees as well as billable hours as well as the applicable rate based on the experience and the type of attorney that is actually rendering the service to say that this is the maximum fee or the minimum fee that you're allowed to charge. And then once you have calculated your total billable fees or your total billable hours, then you're going to then say, this is my total fees. Then on the same fees, you're then going to add the VAT. If you are registered as a VAT vendor, the VAT that you're going to charge your client is then going to be the VAT that you're going to pay over to SARS. So now let's look at different types of transactions that can occur within an attorney practice and then be able to learn the treatment in terms of how do we distinguish the type of VAT and how do we then treat the VAT in terms of that double entry system. Do we debit this VAT or do we credit this VAT? So let's look into that into details. So we've got the type of transaction where the business can enter into transaction of buying or paying. So first we're going to look at where the business enter into transaction of buying on cash. When the business enter into a transaction of buying on cash, you will identify the minimum accounts that are affected. So based on the double entry system, a minimum of two accounts needs to be identified at all time. So this means that in addition to the previous concept that we've learned, this means that now we're going to add an additional account, which is called the VAT account. So there will be an input or either an output VAT account. So we said that every time the business buy, it means that they will be charged VAT, and the VAT they'll charge is called the input VAT. So this means that the three accounts that are going to be affected will be the item that the business is buying, the VAT input, as well as the business bank because money is leaving the business bank account. So this means that when we go and record this transaction, we're going to then debit the item that we buy. This item, we're going to record it at a VAT exclusive amount because the VAT that we are charged on this particular item or this particular product, we are then going to be allowed to claim it back. So this means that our actual cost on that product is the VAT exclusive amount. So therefore, we'll then record this product at a VAT exclusive amount. So we're going to debit the item that we are receiving, and then we're going to debit the VAT input, which indicates that this is the amount claimable, and then we're going to credit business bank. So the business bank will be credited at a VAT inclusive amount to indicate the total amount that the business have just actually incurred. And then there are situations where the business will then be will be paying. So when the situation where the business is paying, we are either paying for goods or services. So either the transaction says that we are buying or either we are paying. So when you are paying for these goods and services, you'll still be paying using cash. So this transaction is not different from the top one. The only difference is that on the previous one, I explained it in a buy option where the business is buying. Now I'm explaining to a situation where it says the business paid or we are paying for a specific service. This also include, for example, your water and electricity, your insurance, uh, your rent, your business rent. So when we pay for this kind of service, you will debit the service that you're paying for. You will then debit the VAT input. You will then credit the business bank. So whatever you're paying for becomes an account in the business to indicate how much you've actually paid for this particular service so that we can keep records of all of those services that we've just actually paid for and incurred throughout the year. So because we are registered as a VAT vendor, the service that we are going to pay or receive in the business will record this at a VAT exclusive amount because the VAT that we're going to be charged is the VAT input in the business will be classified as VAT input, which you're then going to be able to claim it back from SARS. So this means that when we record such transaction, we debit the item or the service that we receive, we debit the VAT input, and then we credit the business bank with the VAT inclusive amount to indicate the total amount paid over to the service provider. Then we also have got situation where we've got you are buying on credit. So when the business buys on credit, it means that this time the money is not being paid over to whoever is providing the service or giving us the goods. So this means that we will still debit the goods that we are receiving at a VAT exclusive amount because that is the actual cost of the goods. The VAT that we're charged, we're going to then debit it to indicate that we're going to be able to claim this back from SARS. And then we're going to credit the business creditor. So when we credit the business creditor, we credit this person at a VAT inclusive amount to indicate that this is the total amount payable to this person, including VAT. This person will take the VAT amount and pay it over to SARS, and then we're going to claim it back from SARS ourselves. So this means that every time you buy goods on credit, you debit the item or service that you are receiving in credit, debit the VAT input, and then credit the business creditor, which is including what? VAT. So once we owe this person is a liability to the business. So this means that this account will increase on the credit side. And as it increases on the credit side, it means that every time we buy and it increases on the credit side, if we pay this person, this means that this account have to be debited to indicate a decrease in the amount owing. So this means that there will be transaction where we will now do what? Where we will be paying. So when we pay the creditors, it means that we're then going to then debit the business creditor, and then here we're then going to credit business bank. When we credit business bank, we'll be indicating the total amount of money that is leaving the business bank account. When we debit the business creditor, we'll be indicating the total amount of money that is um, being paid over to the creditor. That is reducing the total amount that we owe to the creditor. So because when we buy, we recorded the VAT that we were charged and that we're going to claim back. When this time around, when we pay, we ignore the VAT because the VAT was already recorded in our books when we buy the product. If we record it again, it will be a double entry. It will be a double entry, which is in violation of the accounting standards. So therefore, we just only indicate the total amount that we're paying over to the business creditor. The business creditor, once they receive this amount, they take a portion of VAT and then they pay it over to the South African Revenue Service, and then we are then able to go and claim that input VAT back. So this means that when we pay creditors all the time, or when an attorney pays their creditors, the two accounts affected is going to be business creditor and business bank, and there won't be any VAT effects within this transaction. But when we buy, therefore, we're going to also indicate the VAT effects of the VAT that we are charged. And this means that we will then owe the third party the amount, including what? Including VAT. So this is one of the normal business type transaction that can occur within an attorney practice. Now, moving forward to the second type. So to the second type, we then have render to, invoice to, or invoice sent, or account to. So normally in your business transaction, you're going to be looking at a transaction where it says that you rendered the service to a specific client, or you accounted to this particular client, or an invoice was sent to this client for a service that have been rendered. So there will be types of customers that will come in the business, and we are going to have some which are cash customer, some which are credit customer. You will offer your service on credit with the understanding that this customer either have already given you money for future legal services, which is currently sitting in a trust bank. This means that you can trust this client and offer them a service on credit, knowing that they have already paid either what? A retainer, or you've got a retainer in your trust books. And then cash clients are those that will just walk in and then require consultation and then they pay up immediately. So both customer needs to be invoiced and needs to be sent an invoice or be given an invoice. So, so let's start first at the cash customer. So with the cash customer, after rendering a service to a cash customer, whether it's consultation, so the business will debit bank to indicate the money that is received from these cash customers, and this amount will be the VAT inclusive amount. Because we are charging the customer for a service, we'll charge the customer the normal fees that are explained according to the Legal Practice Act, or that we are allowed to charge the customer according by the Legal Practice Act. On top of those fees, we are going to then charge VAT. So we're going to charge the customer the VAT, which in addition to the fees, this will then bring us to a total invoice, which is total fees payable by the client. And then the client will then settle the amount by paying us directly into our business bank account, which is either by giving us cash, which we're going to deposit in the business bank account, or either by through EFT, or either through a debit card payment, which means that now money will be received immediately in our business bank account. So because money is being received, we debit business bank to indicate that the money is being received. This money will be including VAT. So this means that after time you render a service to a cash customer, when you debit your business bank, make sure that the amount is including VAT, and then credit the VAT amount to indicate that this is the amount that we charge this customer that we are going to pay over to SaaS. And then also credit your fees to indicate your income that you have generated through rendering this service to this cash customer. So your fees will then be at a VAT exclusive amount, which is the normal fees that are stated within your LPA Act that you are allowed to charge the customer. Where a customer you're going to render a service on credit, this means that you'll come across situation transaction where we're going to then render a service to a customer, but we're not going to charge them immediately. We're going to then create a debt in our record to indicate that this customer owes us, because we do have trust in this customer that he will not run away with the money that he owes us, either because he already gave us a retainer, or maybe he already gave us money long way back for these current services that we're offering now. Maybe back then he was giving us the money for future legal services, and now those future legal services have arisen. He requires our service, and we offer such service with assurance that there is money in the trust account, and therefore we can be able to claim from that money if once we are done rendering the service. So this means that in our business books, we'll then render the service to the customer on credit. This is where you will see it will just say account 2 in terms of transaction, services rendered to this client, invoice sent to this client. It will indicate that no money have been received, because there won't be any indication of whether money was received. It will just say you accounted to, invoice sent to, services rendered to, and it will never mention that the customer paid. So this means that now we have rendered a service on credit. So because we have rendered a service on credit, it means that instead of debiting business bank, we're then going to debit what we call business clients or business debtor. This account will be debited at a VAT inclusive amount to indicate the total amount that is receivable to the business, which makes the assets to increase to indicate that we are going to be able to receive or have claimed over this much money from this client. And then because we charge the client, we're then going to credit our fees account with the original fees that we're allowed to charge according to the LPA Act. And therefore, in addition to those fees, we would have charged the customer VAT output. So the VAT amount that was charged, therefore, will be credited through what we call the VAT output account to indicate the amount payable over to SaaS. So your VAT output is a liability. So this means that the effect of these accounts will always be a plus sign on the liability side, whereas for the input VAT, it is always going to be a plus sign on the asset side. So they will never have a time where you've got your VAT output being giving a negative effect. So it is always positive to indicate a liability that we have over to SARS. The explanation is the one that is going to differ because every time a business enters into a transaction, whether it is going to be VAT input or VAT output affected, it will all depend on the type of transaction and the VAT treatment in terms of how do you then treat this VAT within this particular transaction. So in this case, we are charging our client. So when we charge our client fees, we then add VAT in addition, and therefore the client will then owe us the total fees plus VAT. So this means that the accounts affected becomes your business client, your VAT, and then fees. You're then going to debit your business client account, credit VAT output, and then credit fees account. Whereas your fees account will actually be the actual income that the business had earned, which is going to be the VAT exclusive amount. When this customer decide that I want to settle their account, so when a customer comes in to settle their account, this will be one other type of transaction that will occur within an attorney practice. Some of the customer will not have the retained money, retainer money or money given for future legal services. This means that based on the agreement, you allow this customer to then receive your service and then they'll then come and pay you at a later stage. So for such customers, this means that when you receive the money, you will then debit your business account, business bank account, to indicate that the money is coming in my business bank account. And then after that, you are then going to credit the client account to indicate that there is a decrease in the amount being owed by this customer, and therefore this customer have paid me this much. So this means that every time you credit your business client account, you're saying that this account is increasing. Every time you debit your business bank, you're saying that this account is increasing. You are receiving money. So since both are assets, this means that the effects of transaction for these accounts are going to be a plus and a minus on the assets, where the plus will be for the business bank and then the credit will be for the business client to indicate that the total money payable or receivable from this client is now being reduced because we did actually receive the money from the client. And there won't be any VAT effects because already the VAT is indicated through what? When we bill the client. So therefore, the money that the client is paying us is already including what? The VAT output amount. So this means that we do no longer need to indicate any records of us having the VAT output because it's already recorded. So please make sure that you do not record any VAT output when you are receiving money from your client or as part of settling of the accounts that the clients owe you because you already indicated the VAT output that is payable to SARS when we bill the clients. And then we've got transaction where goods are returned by the business to the creditors, where you have bought goods before on credit, now you are returning them. So when we bought the goods, I'm just gonna go up a bit. When we bought the goods on credit, we went and debit the goods that we received. We debited the VAT input that we're claiming from SARS, and we credited business creditor to indicate that we owe these people this much money, including VAT. But when we return the goods to the creditor, it means that we will no longer owe them the money for the goods. So this means that this is where we then debit the business creditor account with a VAT inclusive amount because we will no longer be owing them the VAT amount that they have charged us on the goods that we've just returned. Because of that, it means that the VAT input that we are going to receive or claim from SARS, we will no longer be able to claim it. So in order to cancel that VAT input, we then credit the VAT output when we return goods. So this means that the VAT output will be cancelling or indicating that if we already claimed the VAT input when we bought these goods, now we are liable to return as well the VAT that we just claimed through what? VAT output. And therefore, you're going to credit your VAT output and then credit the goods return or item return at a VAT exclusive amount. For example, if you have bought equipment and you find that it was default it had default. It means that when we return that item, we need to credit that equipment account to indicate that this asset account, it is decreasing in value, and therefore this is the original cost of this asset that we are returning. So that will be at a VAT exclusive amount. And then the total amount that we were owing the supplier for this product will be the what? The VAT exclusive plus the VAT that we were charged for that particular product. And therefore, this means that your business creditor account will be debited a VAT inclusive amount. And then we've got situation where now the owner decide to use business money for personal use or either taking assets from the business for personal use. So if the owner uses cash for personal use, business money for personal use, the accounts that are going to be affected is going to be drawings and business bank. Whatever that person is paying, there won't be any VAT effects because when we buy at our personal capacity, we are not allowed to be able to claim the VAT back unless you are registered as a sole trader and you are buying it on behalf of the business. But if you are buying it under your own personal capacity as an individual, therefore you are not allowed to claim back any VAT that you are paying for. So therefore, this means that any transaction that the owner uses the business money for personal use, it doesn't matter whatever it is that item is, we're going to ignore the VAT treatment because the owner cannot be able to claim back the VAT. And this will no longer be classified as a completely business transaction, but a personal transaction. So the account affected that indicates that this transaction is not a normal business transaction, but a personal transaction is your drawings account because every time the owner decide to use the business money, they are withdrawing from their what? From the claims that they have from the business. So this means that it reduces the claims they have on the business and the account used is your drawings account. So you're going to debit your drawings account and then after that you're going to credit your business bank to indicate the total money that is leaving your business bank account. So in situation where now the business owner decide to take a business assets for personal use, it means that when we buy these assets in the beginning, we would have went and debited the item that we just bought, claimed the VAT from SARS, and then credited business bank if we bought it cash. If we bought it in credit, we would have credited what? Business creditor. But now we're saying that the owner is now taking the same assets now for personal use. This means that the assets will no longer be available or be used for business use. This means that the owner again is taking what? Is taking or reducing his claim over the business assets. So this means that if the business have three assets only, which of those three assets were business, three business laptop worth 20,000 each, and the owner take one. It means that now the owner will only have claim over the remaining 20, over the remaining two laptops, which is equivalent to 40,000. And therefore, this means that his equity in the business will also decrease by what? 20,000, which was the amount of assets withdrawn. So therefore, we debit drawings to indicate a decrease in the owner's claim in the business. And then because this time is taking in assets, we have to record the drawings at a VAT inclusive amount. Why do we do this? Because when we bought this item, we were charged VAT. When we were charged VAT, the VAT that we were charged, we were able to claim it back as a business because we're expecting to use these assets for business use. But now we are no longer going to be using these assets for business use. And therefore, this means that it's going for personal use. So according to SARS, this person could have bought, instead of buying through this through business, this person could have just bought this equipment through themselves. And this means that they will not have been able to claim back the VAT. So this means that since it's now going for personal use, any VAT that was claimed by the business on this product have to be paid over back to SARS. So means that now the business will then have to do what? Credit the VAT output for the assets that the owner is taking out of the business. And then over here will then debit the assets Sorry, not debit. It's supposed to say credit. So I'll just erase this whole line. So it's going to say credit the assets that the owner is taking from the business to indicate a decrease in that particular assets. And this will be at a VAT exclusive amount. So over here, we'll then erase this and say credit this at a VAT exclusive amount. So this means that it's every time the owner takes an asset in the business with debit drawings, which is VAT inclusive, we then credit the VAT output to return or repay back the VAT that the business has claimed, because now this is going to be used under personal capacity, but no longer under what? Business use. And then we credit the assets that the owner took, which is then going to be the assets value excluding VAT, which is the original cost that the business incurred, which indicated decrease in that particular assets. So this is everything that you currently need in order for you to understand the whole concept of the VAT treatment within attorney's transaction and business transaction, or to understand the type of VAT treatment in terms of transaction that can occur within an attorney practice. So in terms of types, you can either be buying or paying, when you are rendering service, when you are settling or customers are settling account, when you're returning goods, or when the owner decides to take money for personal use. So in terms of buying, we're saying that every time you buy, you are charged input VAT. So one of the account that is going to be debited is going to be your input VAT. But when you pay your supplier, you'll be paying the amount that is already including VAT, which you recorded before when you buy the item. So this means that you do not need to record the VAT. So there won't be any VAT effects. And then every time you render a service to a client, if it's a cash customer, you will then be charging that customer VAT, and therefore the VAT that you charge the customer will be the VAT output. So the money that you are receiving in your bank account should be the amount that is including what? VAT. And then your fees will therefore exclude VAT. Even if you are rendering a service on credit, your fees will still exclude VAT, but the amount that you're being owed by the customer will be including VAT. And therefore, you'll also indicate a credit VAT output to indicate the liability with the amount owed to SARS. And then when you receive money or claim money from the trust bank account, or when you receive money from the customer to settle the account, you're going to debit business bank and then you're going to credit business client to indicate that the money that is being received in our business bank account is from this client, and therefore this client account is being reduced by this amount because the client will no longer owe us for this amount, as they have just settled or paid us for these goods or for the services that we've rendered to them before. And there won't be any VAT treatment because the VAT was already recognized when we charged the client. And then now the client is paying us. Once we receive the money, we just have to take the VAT portion and pay it over to SARS, which means that when we receive the money, there won't be any VAT treatment. And then lastly, when we return goods to the creditor, because we are returning goods to the creditor's account is debited to actually indicate a decrease in the amount owed to the supplier. And the supplier have charged that VAT, so this means that we also owe the supplier VAT. So this means that the debit of the business credit account will be at a VAT inclusive amount. And therefore, we'll then have the VAT output to indicate that the VAT once claimed when we bought this asset is now also being paid over back to SARS. So we credit the VAT output to cancel that VAT input. And then we're going to credit the goods at a VAT exclusive amount. So I hope this lesson classify and helps you understand the VAT treatment in terms of different types of transaction that can occur within an attorney practice. This is still Mr. Major H. So I hope you have learned everything in regards to VAT transaction. Let's meet on our next lesson when we look at an example which I will extract from your workbook in terms of application, where we're going to be looking at types of transaction and recording them on the accounting equation, applying this VAT effect as well to see if you have mastered everything so that you can be able to prepare for your exam as well as to be able to record transaction in your attorney practice. So this is it from my side. You'll enjoy the rest of your evening. Let's meet on the next session and have a lovely day.